Trading stocks has become very popular in recent years, but the vast majority of traders receive lower returns than they would if they simply invested in low-cost index funds. Why? Because it's very hard. As William Bernstein wrote in his book, The 4 Pillars of Investing, trading individual stocks is like playing against an invisible opponent. What the investor doesn't realize is that he's trading volleys with the Williams sisters.
Well, we tend to think of trading stocks, especially buying stocks, as a solo activity, kind of like ballet. You're just out there performing. But in fact, it's a one-on-one competition. And the analogy which you just referred to is it's not just that you're volleying against the Williams sisters, it's that the Williams sisters are on the other side of the net, but you don't know they're on the other side of the net. You can't see who's on the other side of the net. You don't know who you're buying from when you buy a stock or who you're selling to when you sell the stock to. And so what you don't realize is the person on the other side of that net is not some idiot dentist from Peoria who doesn't know what he's doing. The chances are that person has a name like Goldman Sachs or PIMCO or Warren Buffett. Or that's not even the worst case scenario. The worst case scenario is that you're trading with the CFO of the corporation who knows more about that company than anybody else on the planet. You don't want to be trading with any of those people.
Most traders, in other words, are overconfident, and that shouldn't surprise us. Behavioral psychologists have repeatedly shown how human beings are prone to overestimate their own abilities.
We all think that we're better drivers than we actually are. 80% of the population thinks that they're an above average driver, which is a mathematical impossibility. And more generally, we all think that we're better liked and better looking and more pleasing than we actually are. And it's just to have a lot of humility about all of those things, and particularly to have a lot of humility about your ability to pick stocks, or even for that matter, just to pick asset managers.
As William Bernstein says, trading stocks is highly competitive. Most of us would struggle to compete with the professionals on skill or knowledge. But the good news is we don't need to outsmart them at all.
Finance isn't a process or a game in which the person with an IQ of 160 or 170 wins. In fact, most of the time, the person with the IQ of 170 doesn't beat the person with the IQ of 130. What the real way that you win the game is to have more discipline.
In summary, be humble. You're not Warren Buffett, and you're highly unlikely to outperform through stock picking or market timing. But being patient and disciplined will give you a decisive edge.